Hey everybody, this is Jim at SP500chart.com. It's July 8th, 2013, a little bit after 4 o'clock. We're going to take a look at the chart using some time-honored techniques to try to understand these modern markets. Before we do so, I need to read this little short story to you. And that is www.sp500chart.com, and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I'll remind you that I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, we got what I would call a something of a victory today, and that is a couple of things happened that are kind of bullish. We still need to keep an eye on things. The first thing that happened is, you'll remember, we were looking at this pattern down here as a potential inverted head and shoulders pattern, and we had measured the minimum expected move from that pattern based upon where it broke out over this neckline. And with that measurement, we ended up with 1645, and today, and again, this could be off by a very small fraction, but depending upon how ticky we get with getting this thing just absolutely right, I think it's sufficient to say that today's high of, what was the high? I show about 1645. I think it may have been 1644 and change. Tell you what, hold on, I'll tell you for sure in just a second. Okay, the high was 1644 and 68 cents. So, hey, that's 1645. This pattern played out. But another thing took place that I think is certainly worth mentioning. It's funny because I just read a headline that said something about the S&P approaching new high. And I'm not quite sure how a person can make that claim quite yet. And the reason I say that, because we're at 1640, mid-1640s. That new high is still 40 points off. So that seems to be a little bit premature, seeing as how we are a solid 2.5% under new high territory. But something happened today that certainly I think is a potential precursor to a high to challenge that 1680 plus, mid 1680s from back in May. And that is, we broke out over the top of this orange resistance line, and I believe this line is technically significant. I think the move today is certainly something to be reckoned with. Now, another thing that happened, just as a matter of interest, not because it's really that incredibly important, and I'm not really counting on this line necessarily having a lot of influence over the market, but I think it is interesting that as we extended this line on our chart just over the weekend, and we've looked at this as being a potential resistance line, that line too today got taken out, although not by a technically significant margin, but it got taken out and then twice was back tested and it held. Now, I'm not ascribing a lot of strength to this line. As a matter of fact, I rather suspect it's gonna fail, and I suspect it could very easily fail tomorrow. But being over this line now, I think we can, with again with a little due caution, because of not being over this line by a technically significant margin. In other words, we're only over this line by, what, about 8 points at the height of the day. Then maybe 10, 8 or 9 points. I would still look to this line as producing some support, much more so than I would this line. For one thing, this was a rising line that broke out to the upside. So automatically we know don't expect too much. Because when you have a rising line, a rising resistance line that breaks out to the upside, you just can't expect it to hold. Even though it did today, I think just a little bit of selling pressure and that line gives way. But if we come down to the mid to low 1630s tomorrow, I would expect this line to produce more of a bounce. Now, another thing happened today. So today's just full of really cool stuff. The first thing is, A, we got our minimum target from our inverted head and shoulders. B, we got our back test on our lower green line that we have been talking about for quite a while. And remember, we had been looking at a pattern here that was defined by these two lines right here. This really served as a bear flag that took the S&P down into the 1560s. But now we've had a full back test up to this line. Having made the full target from this pattern, I don't know that we can necessarily expect much more downside. So it could be possible for, with a renewed strength, if some earnings come in good, then I think there's a decent chance the market has to possibly overcome this line, or if not overcome it, maybe go right with a little bit of downwards bias in the chart, maybe retesting this line at some point down in the 1620s, then coming up and trying this line at some point down the road. But what I'm saying is, since this target has already been met, I don't think we can necessarily expect the broken support line here to extend for eternity off to the right, because we've already made that target. It was a fairly short-term pattern, and once they've done their thing, you can't necessarily expect that line to always serve as resistance. I think you can expect it to provide some resistance, but to always, for as long as the markets are going to trade from now to eternity, no, you can't expect that. So I would be open to the S&P regaining a position over the top of this green line. And just to remind you too, we talked about a couple things over the weekend. We talked about the potential of us seeing a head and shoulders top develop, where this would be the right shoulder, this would be the head, this would be the main part of the rally of the right shoulder that we're seeing now. But with the move over that orange line, I think we have to now consider the alternative, which is a bullish outlook. And the bullish outlook would say that this may be a left shoulder, a head, and then another dip on a right shoulder, setting up an inverted head and shoulders continuation pattern. Again, we just have one very small piece of evidence to add to the puzzle after today, and that is the fact that we're over this line. So if this is a move that carries technical significance, then this would seem to indicate that we're more likely to be looking at the bullish interpretation of this chart rather than the bearish. But we still need to be aware of both of them. Now I've added one more line on today's chart, and that is this rising support line, which now that we know that this is a fairly important little bottom right here, just under right around 1605, then we clearly know that this low 1560s mark right here from the 24th is important. So I'm extending this line forward with the idea that if the S&P breaks this line, then we would likely be setting up at least an intermediate to a short-term downtrend. And if that were to happen, let's say we break that line later this week, then that could very well give us the room that we would be looking for to potentially, and again, this is speculative here, so don't hold me to this too much. But let's say we move up a little bit more and we get up, maybe hug this bottom line for a bit, and then we come down and break this and back test maybe around the middle of July to the third week of July. Then we come back up. This could be making an inverted head and shoulders pattern that could have an expected target, well over 1720. So just a couple things to keep in mind. For right now, I wouldn't expect this line to hold, and I would expect this line to still provide some resistance. That said, I also expect this line to provide some support. So it looks to me like the S&P may be in for a little bit of range-bound trading, perhaps, over the next couple of days. Let's see how that pans out. So there's your video for the S&P for July 8th, 2013. Hey, thanks for watching. Thanks for your support. Take care.